This is Nightly Business Report with Sue Herrera and Bill Griffin.
Shiny Apple. Revenue at the company rises even as sales of its flagship iPhone decline, reassuring investors for now.
We would need to see a really significant move up in inflation that's persistent before we even consider raising rates to address inflation concerns.
The Fed cuts interest rates for the third time this year, but it was its outlook for future rate hikes that sent the S&P 500 to its 15th record close of 2019. Grilled on the Hill, lawmakers slammed the CEO of Boeing, this time for his $30 million salary. Those stories and more tonight on Nightly Business Report for Wednesday, October 30th. Good evening, everyone, and welcome. Bill has the evening off. The S&P 500 closed at a record following comments from the Fed chief. We'll have more on that in just a moment. But we begin tonight with Apple. The trillion-dollar company reported earnings and revenue that topped expectations, even as iPhone sales declined and overall profit fell from a year ago. The company said its all-important holiday quarter could potentially beat last year's growth. It also suggested that it could surpass the record $88 billion in revenue hit in 2017. The stock, which is widely held by investors in everything from mutual funds to ETFs to retirement accounts, rose in initial after-hours trading. Josh Lipton has more on the quarter from Apple's headquarters in Cupertino, California.
Apple no longer breaks out how many iPhones they're selling quarter in and quarter out, but they do still break out total iPhone revenue, and that was better than expected at $33.4 billion in the quarter. Analysts have been looking for something closer to $32.4 billion. Now, iPhone revenue was down 9%, but that was a sequential improvement. CEO Tim Cook telling me in an interview that of those three new iPhone models, the 11, the 11 Pro, and the 11 Pro Max, it is the 11 that has been his best seller there. Remember, that's a successor to the 10R. Beyond Apple's bread and butter iPhone franchise, investors make a beeline to that faster growing, higher margin services segment. That jumped 18% to also a better than expected $12.51 billion in the quarter. For Nightly Business Report, I'm Josh Lipton, Cupertino, California.
Daniel Flax joins us now to talk more about Apple's earnings beat. He is the senior research analyst at Neuberger Berman. Welcome, Daniel. Nice to have you here.
Great to see you, Sue, as always.
The outlook that Tim Cook gave was quite bullish. Do you think it signals that he has managed to transform the company from its reliance strictly on iPhone sales?
Sue, I think it's showing the broadening of the revenue drivers. The iPhone franchise remains healthy. I think what's important in the most recent launch of the iPhone 11 was the $50 price cut, helping to drive demand. Of course, you have batteries that last longer, a significant upgrade to the camera. That's important. I think the services business remains very healthy. And then you have opportunities in wearables where the company is really just getting going.
So if you had to look at the stock right now for a long-term investor, a lot of people feel as though the stock is expensive. It certainly is performing well, but it may be a little expensive. What do you think of the stock?
So we think the stock is attractive over the next couple of years because you have this company innovating on multiple fronts. And ultimately, it's about delivering differentiated products and services. You, of course, have Apple's new TV offerings coming out in November. And so we like the story here over the next 2 years.
In terms of what Mr. Cook said about transforming the company, he has a lot of competition, as you just pointed out, going into the streaming space and the like. How do you think Apple is positioned for that competition?
I think the way they're approaching it is really to come up with curated content. The company, from what I can tell, is not trying to be all things to all people. I think the content creation and working with luminaries such as Oprah and Steven Spielberg will give Apple a shot to really make a difference over the next couple of years. I think when we think about the story, content has the ability to strengthen the ecosystem and really help add value to Apple's customers' lives.
All right. On that note, also, the iPhone sales decline, is that at all worrisome, or did you factor that in?
We were expecting the iPhone to decline. Recall, of course, that in the prior year, the iPhone sales were very strong. When we look out over the next 12 to 18 months, we expect the iPhone business to return to growth. And that's driven by, of course, very strong product lineup. And at the end of next year, we should have a 5G iPhone coming out, which could also help sales.
We will see. Daniel, thanks so much. Daniel
Thank
Flax
you,
with
Sue.
Neuberger Berman. And now to the other big story this evening, and that is the Fed. The central bank lowered interest rates again and pointed to a possible halt on further rate cuts. But the Fed chief did more than that. He also hinted about when the next rate hike might come, and that helped lift the stock market. The Dow Jones Industrial Average rose 115 points to 27,186. The Nasdaq added 27, and the S&P 500 was up 9 to an all-time high. Steve Leisman has more from Washington.
The Federal Reserve met market expectations and cut interest rates by a quarter point. Its third cut this year. The new range of the Fed's overnight lending rate is now 1.5 to 1.75%. But Fed Chairman Jerome Powell signaled that the rate-cutting exercise is likely over for now.
We think that the current stance of policy is likely to remain appropriate, as long as incoming information about the economy is broadly consistent with our outlook, which is a positive one of moderate economic growth, strong labor market, and inflation moving close to 2%.
Concerns over the trade war and global economic weakness were behind the cut now, but Powell suggested the Fed had provided a lot of help to the economy already, and that seems like enough. In its statement, the Fed dropped a critical phrase from prior announcements that it would, quote, act as appropriate. That had been a signal to markets that future rate cuts were coming. That's gone now. Instead, the Fed says it will, quote, assess the appropriate path of the funds rate, and that means the Fed is likely on hold for a while. So what would it take for the Fed to resume cutting? Powell said the economic data would have to come in much weaker than the Fed expects. And Powell also provided positive news to markets by suggesting the Fed is far from potentially hiking interest rates.
I think we would need to see a really significant move up in inflation that's persistent before we even consider raising rates to address inflation concerns.
There were two dissents to the statement, both by Fed bank presidents who did not want to cut rates. But presumably after 3 rate cuts and now a Fed that's on hold, the committee might be less divided now. For Nightly Business Report, I'm Steve Leisman in Washington.
Let's turn now to Brian Nick for more analysis on the Fed and the market. He is Chief Investment Strategist at Nuveen. Brian, welcome. Nice to have you here.
Thanks for having me, Sue.
What did you make of what the Fed not only did today, but what the Fed chief said today?
Yeah, I think what he said was much clearer than what was in the statement. So we had to wait about a half hour for it to become, I think, crystal clear that, yeah, the Fed does intend for this to be the last rate cut, at least for the moment, and that they're moving into December with, I think, somewhat more optimism that some of the policy risks that had been bothering them have mitigated somewhat on trade, potentially on Brexit. And they don't think that continuing to cut rates is going to be necessary for the U.S. economy to grow at about where it grew in the third quarter, which is about 1.9%. That's the Fed's forecast for next year. It's about our forecast as well.
So the trade situation, though, still seems to be somewhat more fluid than certainly the market would like it to be. Is that the biggest risk for the Fed now?
In the short term, absolutely. There are still tariffs that are set to go into effect on December 15th. The October 15 tariffs were canceled. I think when Powell talked about mitigating risk, I think he was mainly referring to those October 15 tariffs that could have gone into effect but were tabled as part of the ongoing negotiations between the U.S. and China. But if those December 15 tariffs move forward, and it seems likely that they'll also be delayed as part of the ongoing negotiations, but if they do go into effect, that's something that I think would potentially bother the Fed. Unfortunately, their meeting is December 11th, and the tariffs go into effect on December 15th, so they have a bit of a time problem with trying to figure out exactly what's going to be happening at the end of the year.
And also the Brexit situation. Granted, things are still fluid there, but they do seem to have lessened. How would you rate that in terms of a risk for the market, the economy, and the Fed?
It's still a risk, but it's much lower than it was because the risks of the UK crashing out of the EU with no deal in place and a lot of uncertainty about how the border would be treated, how taxation would work. That seems like it's gone from maybe the most likely outcome to one of the less likely outcomes. There's going to be an election, again, December 12th, the day after the FOMC meeting. So the FOMC won't have an idea of what's going to be happening with UK politics, but it may feel better knowing that regardless of the outcome of the election, you'll either have a second referendum that will end up potentially with no Brexit, or you'll have a deal that's now more solid between the EU and the UK, which will be much less disruptive to global financial markets. And that was one reason why you've seen interest rates move up in anticipation of this FOMC meeting, because there's some risk being taken off the table with Brexit that's affecting the global markets.
But beware of December. I think hear you saying that. Brian, thanks so much.
A lot can go wrong in December.
Yeah, exactly. Brian Nick with Nuveen. Thanks so much.
Thanks, Sue.
Job growth at private businesses picked up in October. According to ADP, employers added 125,000 positions last month. That is slightly above expectations. Education, health services, and transportation all saw job gains, while manufacturing, construction, and mining saw job losses. A separate report showed the economy grew at an annualized rate of 1.9% in the third quarter, thanks to continued consumer spending, which offset a decline in business investment. That rate was slightly better than expected. The CEO of Boeing was back on Capitol Hill today. Dennis Muhlenberg answered questions from a House panel over the troubled 737 MAX. And this second day of testimony was just as heated as the Senate hearing was yesterday. Phil LeBeau is in Washington for us following the story. Good evening, Phil. What did you make of the testimony today? What about the... Go ahead.
Sue, I was going to say much more pointed today, especially around two issues. One, the compensation that he receives and whether or not he should waive that compensation. And also, should he even remain as CEO of the company?
Is anybody at Boeing taking a cut or working for free to try to rectify this problem like the Japanese would do?
Congressman, my board will conduct a comprehensive review.
So you're saying you're not giving up any compensation at all. You're continuing to work and make $30 million a year after this horrific two accidents that caused all these people's relatives to go, to disappear, to die. You're not taking a cut in pay at all?
Again, our board will make those determinations.
You're not accountable then. You're saying the board's accountable.
My intent is to see this through. I think that's part of my
Mr. Muhlenberg, if you had an ounce of integrity, you would know that the right thing to do is to step down.
You're the captain of this ship. A culture of negligence, incompetence, or corruption starts at the top, and it starts with you. You padded your personal finances by putting profits over safety, and now 346 people, including 8 Americans, are dead on your watch. Today, you said you made mistakes, and you're accountable.
Following the hearing, we had a chance to catch up with Dennis Muhlenberg, and I asked him point blank, does he plan to stick with this company or give back his compensation? Here's what he had to say.
You had more than one representative who say, you're not the person, you should resign.
No, I understand those inputs, Phil, and I respect them. But again, my focus here is on taking responsibility, owning it. We know what we need to fix. We're making those changes. We're going to continue to get better as a company, and I remain resolute on that responsibility.
Will you waive your compensation this year?
Phil, again, compensation is a decision that my board will make. And they'll do a comprehensive review.
By the way, Dennis Muhlenberg's compensation, typically that is decided by the Boeing Board of Directors. As far as a bonus, Sue, that would likely happen early next year, likely in February or March.
There were also questions, Phil, about the plane itself and its possible return to service by the end of the year. Boeing's been predicting that, but what are the possibilities of that?
I think that there's still a chance that could happen, and the people we talk with who are part of the process think it could happen. But keep in mind, the last 2 days have been brutal, not only for Boeing, but also for the FAA. They're going to face some pressure not to be pushing this plane back into service too quickly.
Phil LeBeau in Washington for us tonight. Thanks, Phil, as always. It is time to take a look at some of today's upgrades and downgrades. Nordstrom was downgraded to sell from neutral at UBS. The analyst says a weak holiday shopping season, tariffs, and e-commerce disruptions are likely to pressure earnings. The price target is $30, and the stock fell 5% today to $35.21. Xerox was downgraded to underweight from neutral at JP Morgan. The analyst cites the stock's valuation after a 70% run-up so far this year. The price target is $31. The shares fell a fraction to $34.12. Biogen was upgraded to outperform from market perform at Bernstein. The analyst cites the company's experimental Alzheimer's drug that it plans to submit for FDA approval. The price target is $370. The shares were up a fraction to $299.89. Well, Facebook users don't appear to be fazed by the political pressure facing the social media company. It reported better than expected earnings and revenue and saw its user base grow. That sent the stock higher in initial after-hours trading. Julia Borston has the details.
The key takeaway from Facebook's earnings, the social giant is still firing on all cylinders. Facebook beating expectations across the board, drawing advertisers and users despite the regulatory concerns about the company and its investment in protecting the platform. The key metric of Facebook's success, average revenue per user. That number grew to $7.26. That's more than 20 cents better than analyst consensus expectations. And perhaps most notable is the growth of its most valuable user base in the U.S. and Canada, which had been stagnating over the last 2 years. In the third quarter, Facebook grew its daily active users in the U.S. and Canada by 2 million and grew those monthly active users by 3 million, showing users aren't bothered by the negative headlines. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Twitter late today said it is banning all political advertising from its service. The company says that advertising on social media offers an unfair level of targeting compared to other mediums. As you may know, the majority of money spent on political ads in the U.S. goes to television ads. Still ahead, as the wildfires burn, insurance companies are reassessing their risk. Chile is calling off the Asia-Pacific Economic Cooperation Summit that it was scheduled to host next month. That is the same meeting where President Trump and China's President Xi were planning to meet to discuss a possible Phase 1 trade deal. The cancellation comes amid anti-government protests there. The White House says it is awaiting information on a new location for the summit and that it's looking forward to finalizing the deal with China within the same time frame. Word of the cancellation sent the Chilean ETF lower in today's trading session. And now to California, where a new fast-moving brush fire broke out north of Los Angeles. The fire is burning near the Ronald Reagan Presidential Library, which has been evacuated. And for the first time ever, an extreme red flag warning was in effect in Southern California. Wind gusts could reach 80 miles per hour, making the fire harder to contain. The wildfires are also putting a lot of attention on the insurance industry. So we asked Contessa Brewer to do some digging.
For insurance companies, the cost of doing business in California is going up. The industry has paid out almost $25 billion for wildfires in California the last 2 years. And actuarial firm Milliman estimates the 2017 wildfire season alone wiped out more than 10 years of underwriting profits for companies that write homeowners policies in California. Insurers are trying to make the numbers work, hiking premiums and lowering their exposure. The state insurance commissioner says 340,000 rural homeowners have had their policies dropped in just 4 years. Last year, non-renewals increased by 6% statewide. But in fire-prone Nevada County, in the foothills of the Sierra Nevada mountains, there was a 38% increase in dropped policies. And these numbers don't include the aftermath of the Camp Fire in Paradise, the deadliest wildfire in California's history. About 30,000 people lost their homes, and $8.4 billion in insured losses were reported to the California Department of Insurance. Today, the CEO of Chubb Insurance, Evan Greenberg, was asked on the company's earnings call about his exposure to the California wildfires. He said, quote, "I'm just concerned, did we measure the exposure correctly? And did we charge a proper price for taking the risk?" For those who've seen their insurers drop the policies, it's often difficult to find a new policy and almost impossible to find one at affordable rates. Another way the insurance companies are trying to minimize their risk is to reduce the risk of homes catching fire. Insurers like Chubb contract with the nation's largest private firefighting company, Wildfire Defense Systems. The company deploys teams of certified firefighters to go house to house and mitigate risk, installing portable sprinklers, laying down fire-blocking gel, removing any fuel for burning embers. Right now, the company has 59 engines at the Kincaid and Getty fires. USAA told me it provides that service to all members in the 15 wildfire-prone states it serves, and the service is provided at no additional cost. Just one more way insurers are trying to lower their own risk. For Nightly Business Report, I'm Contessa Brewer.
General Electric shows progress, and that's where we begin tonight's market focus. GE posted better than expected earnings and revenue as the company focuses on its balance sheet and paying down debt. The conglomerate also raised its full-year cash flow outlook and says it sees signs of its troubled power unit stabilizing. The shares responded, rising 11.5% to $10.11. Tupperware missed estimates as both profit and revenue fell. The company cited slowing demand in several of its key markets. Tupperware also lowered its full-year guidance, and shares were punished, hitting a 52-week low and losing more than a third of their value to close at $10.16. McKesson posted mixed results as the drug distributor beat analysts' revenue forecasts thanks to price increases on its branded drugs and distribution of specialty drugs. But the company fell short on earnings estimates due to settlements in the opioid-related cases. The key, though, may have been a drop in its operating margin, which signals pricing pressures in that industry continue. The shares slid more than 8% to $136.79. And reporting after the bell, Lyft reported better than expected revenue thanks to an increase in users who also spent more per ride. The ride-hailing company also raised its guidance for the year, but shares were volatile in initial after-hours trading, and they closed the regular session up just a fraction to 44.11. Also, after the bell, Starbucks topped Wall Street's revenue expectations, driven by an increase in U.S. and worldwide same-store sales. It also saw strong demand for its loyalty program and new delivery options. Shares initially rose in after-hours trading. They closed the regular session up a fraction to 84.19. Coming up, did Joule knowingly ship contaminated pods? That's what a lawsuit is alleging. HBO Max is entering the increasingly crowded streaming industry later than its rivals and at a higher price. The service will debut in May of next year and cost $14.99 per month. AT&T owns HBO, along with CNN, Turner Broadcasting, and Warner Brothers, which it acquired with the $85 billion purchase of Time Warner. And according to Warner Media's CEO, content is just one of its advantages.
We go forward on this, people aren't going to just buy content for content's sake. They're going to buy content because it's associated with other products and services. Whether it's Amazon, who chooses to offer marketplace incentives to have video, right, or it's AT&T that chooses to put great value with pay TV or connectivity or broadband associated with it. Those are other reasons for people to come into the product as well.
Shares of AT&T were up slightly in today's session. Challenges are mounting for Joule. The best-selling e-cigarette brand in the U.S. is now at the center of a lawsuit that includes some pretty serious accusations. Frank Holland has more.
This whistleblower lawsuit claims that Joule knowingly sold 1 million contaminated nicotine pods earlier this year. It also accuses former CEO Kevin Burns of putting profit over the health and the safety of customers. Now, according to the lawsuit, when the whistleblower voiced concerns over potentially unsafe pods, Burns said to him, "Half our customers are drunk and vaping like mofos. Who the blank is going to notice the quality of our pods?" The lawsuit was filed on Tuesday by Siddharth Breja, Joule's former senior vice president of finance. He claims he was terminated in March for confronting management. The lawsuit claims the contamination was a direct result of Joule trying to make up for revenues lost by removing flavored pods from stores and maintain the company's valuation. In November of last year, Joule announced it would only sell flavored pods online in response to teen vaping concerns and the FDA. According to the lawsuit, Joule also intentionally marketed mint pods as menthol to avoid classifying those as a flavor, and then pressured a supplier to increase production of mint, which allegedly led to the contamination. The lawsuit also alleges Mr. Breja was instructed to recover $7 million from that supplier in compensation for the contaminated pods, while some were still sold to consumers. The lawsuit was filed on the same day reports surfaced that Joule's CFO, Timothy Danaher, is leaving the company. In the lawsuit, Danaher is accused of knowing that contaminated pods were being sold. Joule issued a statement this morning saying Mr. Breja's claims are baseless. He was terminated in March 2019 because he failed to demonstrate the leadership qualities needed in his role. The allegations concerning safety issues with Joule products are equally meritless, and we already investigated the underlying manufacturing issue and determined the product met all applicable specifications. Mr. Breja's attorney responded to that statement this afternoon, saying in part, Joule is now admitting that a large number of pods with manufacturing issues were shipped to customers, although internally executives repeatedly termed it as contamination. If the product met all applicable specifications, then why did Joule instruct Mr. Breja to obtain a multi-million-dollar refund from its supplier? We also reached out to tobacco giant Altria, which last year purchased a 35% stake in Joule for nearly $13 billion. The company declined to comment, but will likely face questions during its earnings call on Thursday. For Nightly Business Report, Frank Holland, New York City.
Before we go, here's another look at the day's final numbers on Wall Street. The Dow rose 115 points, the Nasdaq added 27, and the S&P 500 was up 9 to another all-time high. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we'll see you tomorrow.